What is up, everyone? This is Radko Karim, and welcome to this video. In this video, we'll look at the books of original entry and some of the differences between the cash sales as well as also the credit sales. And then from there, we also try to look at different kinds of ledger and also different kind of sales daybooks. Different kind of journals and also daybooks. Okay. So if you're new to this channel, please make sure that you do subscribe so that you don't miss any update from us, Radko Academy. Okay. So as you can see, books of original entry. Okay. So when you are talking about books of original entry, what you need to understand is that we are looking at some of the primary books in which business transactions are recorded for the first time. Okay. So if you are doing business and maybe you happen to go for shopping, for example, or you are a small entrepreneur who buys things in large quantity, and then you kind of break them down into smaller quantities so that you can be able to actually, be able to supply the people that I need. Now, you may also face a challenge in terms of when the business start growing. Okay, so if you're such a small business, okay, at some point, okay, before you have grown into a bigger, entrepreneurship or just a business, you discover that you can keep all the transaction in one book. Okay, so despite how many transactions you are receiving per day or even just in a week. But again, the challenge is that when the business starts to grow, you'll discover that those transactions, okay, they need separate books, okay, because we can't just put all the transaction in one single book. And this is now where the concept of the sales day book comes in, and also the ledgers comes in, and just in general, the journal or the day books comes in. Okay. So we look at the books of original. So see. Okay, so we are saying that books of original entry, these are books in which transactions are first recorded. So those are the books in which you, for the first time, or before you kind of start opening any kind of an account, these are the books in which the transactions are first recorded. Okay, so what are the types of books of original entry? Okay. So what you have. So these are some of the day books that we have. So these are the books in which you can be able to record these first transaction. Okay. So we have the sales day book, or even just call it the sales journal. And then from that, we also have the purchases journal, or the purchases day book. And then we also have returns inward day book, or returns journal, returns inwards journal. We do also have returns outward journal, okay, or returns outward day book. Now from there, we do also have maybe number 5. We do have the Okay, so these are some of the debtbooks that we have. So as a owner of the business, you have to understand that these are some of the books that do exist. So we have the sales journal or the sales debtbook. We also have the purchases debtbook or purchases journal. We also have what is called a returns inwards debtbook or returns inwards journal, and also returns outward journal or returns outwards debtbook. And we also have the cash book and then also the general journal. So these are some of the primary books that you can record the first transaction that is being the business is performing, for example. Okay. So now, after you understand these kind of or types of daybooks that do exist, then you have to understand that there is now what we call a ledger. Okay, that's kind of just a consolidate all those transactions that are maybe coming from the sales daybook, the purchases daybook, as well as maybe returns inwards daybook or journal. So there is a ledger, okay, which kind of just consolidate. Okay, so now you have to understand how do you perform now the transaction. Okay, because you have to make the entries in these journals, and then also after you make the entries in those journals, and then you post these entries in the specific ledger. Okay, so if the entries have been done in a sales daybook, then you have to post them into the sales journal. The sales ledger. And then also purchases daybook from purchases. Now we take them to the purchases ledger, and then finally to the general ledger. So let's now see how you can go about doing that. So I'm just going to actually, in this example, tackle on one kind of the journal, sales daybook or sales journal, and then also create the daybook for that, and then finally we post it to the sales ledger. Okay. So let's now keep watching. Okay. Okay, so now we are going to look at the sales daybook. Okay, but one of the most important things that we need to understand is that where do the information, okay, or where does the information that we use to put in the daybook come from? Okay, so if you are the seller, okay, of a certain product, and then the customer comes, so there's the buyer and the seller. Okay, so I am the seller. Okay, I'm the one that is selling to you some items or some product, and you are the buyer. Okay, so now each time you buy something, okay, and then I sell you something, okay, so there is a document that I'm going to send to you that indicates the items and the quantity and the price of the product that you have ordered or that you have just purchased or even just bought. So now, a special document called the invoice is usually sent from the seller to the buyer. Okay, but of course, one thing that you must be able to understand in this transaction that we are looking at, and in these are the daybooks, sales daybook, purchases daybook, and other books of original entry. So all those books that we are talking about, we normally record things that are done on credit sales. Okay, so we are not considering anything that is done on cash because we don't need any details about the name of the customer, the amount of things bought from a cash payment. Okay, so remember that when you buy something, the seller is going to actually he or she issue with a document called an invoice. So from the seller's perspective or point, so this is going to be sales invoice. So if it's coming from the seller, okay, and then it's going to be sell purchases. Okay. Okay, so now if I'm the seller, like I was saying, I have to prepare this document called the invoice, and then I'm gonna issue this invoice to the buyer. Okay, so to me, it's gonna actually be the sales invoice, and to the buyer, it's gonna actually be the purchases invoice. Okay, so those are the things that we get normally when we buy something. Okay, let's say we are buying something on credit, and they just gonna actually issue us such an invoice, okay, which obviously also include how much is the discount, how much is the VAT also. Okay, so now we understand how the information or where the information comes from. So that's the information that we're going to put into the debt book. Okay, so now the fact that we are selling, we are going to actually get this information as the sales invoice, and then we're just going to actually put it into sales debt book. Okay. Okay, so now you can simply now see that we have now the sales debit. Okay, so what we have is that the information that is coming from the invoice that was issued to the certain maybe customers or just buyers, for example. So in that sales book, what you can see now is that there are columns, okay, that we need to take note. So we have the date column. We also have the details column, as well as we have the column for the invoice number, okay, and then also we do have the column for the folio column, and also the amount, the actual amount of that invoice. Okay, so now this is actually going to help us understand what is the invoice number of a certain customer or buyer, so that we can actually follow them up and see if they also paid up that amount. Okay, but the point is that this is just the primary book that we have entered these customers that have bought stuff or on a credit. Okay, so we are normally entering these items that are credit based. Okay, so now you can simply see now that the first customer is D Poe. Okay, so D Poe, the invoice number is 16554, and the folio SL sales ledger number 12, for example. Okay, so what this means is that let's say this is a sales ledger, of course, number 12, and then amount is 560. Okay, and then on 8 September, we have T's Coke Band. The invoice is this sales ledger number 89 and 1640, that's the amount. And 28, we've got C Carter. Okay, now you can see the last number there is the general ledger. Okay, the general ledger number 44. So when you add up all these amounts, okay, so you're going to actually get 3,520. So once you get all these details put in the sales table, you have now to post them to the sales ledger. Okay, so these are the ledger's number, okay, that are going to help us understand to say this customer is sales ledger number 12, sales ledger number 89. Okay, so then from here now, these entries must be now transferred to the sales ledger, and then finally to the general ledger with this total amount. Okay, so now in the next video, we shall look at how you can be able now to transfer these details to the sales ledger, and finally make the final posting to the general ledger. So thank you so much for watching, guys. If you like this video, please subscribe so that you never miss any update from us, the Radical Academy. It's bye-bye. We'll see you in the next video. Okay, so now the next step that you take is, after you have now drawn up the day book, like we have seen in the previous video, the sales day book. So the second step that's going to come up is now where we are going to make some posting from the day book to the sales ledger. And then from the sales ledger, we kind of now finally post it to the actual account that you're dealing with, okay? Because all these transactions are based on sales. So we're going to actually post them to the final actual account, which is just the sales account. But how do we do that? Okay, so you must be able to figure it out that what normally happens is, so Okay, so now what you're supposed to do is to transfer these entries from the daybook, which is just kind of the sales daybook, to the sales ledger. Okay, and this sales ledger, you're going to post all these from the sales daybook to the debit side of that sales ledger of the customer's account. And then after we do that, now we are going to actually transfer, okay, from the sales ledger from which is now the debit side of that sales ledger's customer's account, and then also we take it to the general ledger and on the credit side of that sales account. So now let's see how we can go about doing that. Okay, so make sure that we do understand this. Okay, so now what is happening, what you can see on the board is that we are now drawing up the sales ledger for that customer account. Okay, so now this is in our books. Okay, so we are going to debit them because we have received that part of sales. Okay, or we have made the sales. So debit the receiver, credit the giver, and this is what is happening. So this is in our book, and we are creating the account of the transaction in terms of the ledger for this particular customer who is D. Paul. Okay, so D. Paul. So the detail is that this is sales. Sale is made, and the folio is sales day book, page 26. So with how much? 560. Okay. So now you can see how you can go about doing that from the sales day book to the sales ledger. Okay. So you kind of debit these each transaction. Now from the sales day book, if there are many transactions that were performed, okay, by this customer, we would have just continued to actually include them. But since from the sales day book, we only have one transaction that Depot performed, and this is so in the sales ledger, we're just going to have actually one entry of that transaction, and then you can continue now doing that for every transaction that are now in the sales day book. You can now do specific for each one of those. Okay, you create a sales ledger, and then particularly for each of those you create one. Okay, so now the moment you do this now, what you're supposed to do is now post them to the final ledger. I mean the general ledger, which is now posting to the credit of the sales account. Okay. Okay. So now, from the previous example, you saw how the transaction for that customer was entered in the sales ledger. So for every transaction or for each customer that appears in the sales book, you can just do the same. For each, you create separate entries under the sales ledger. Okay, and then now from there, once you're done, all the transactions are done in the sales ledger. Now the total amount of these sales that was made on different dates, we have to post them now to the general ledger, and this is now the sales account. So now as you're posting them to the general ledger of the sales account, we have to credit, okay, because that does not now belong into our accounts, because now what happens is that we are performing the double entry, okay, cash sales, okay. So you credit, okay, you credit the receipt. I mean you credit the giver, okay, because we are exchanging, okay. So what is going to happen is that on the last period of this transaction, or on the last date of the transaction, okay, so we are going to say so now we are not going to actually enter the figure into the debit side, okay. We're going to actually enter it to the credit side of this general ledger, okay. So I hope and believe that you do understand that, and this is going to be